Okay, hello guys, good evening. So I've been receiving a lot of messages about how I analyze this JP225 trade, right? So I'm just going to explain it at least in a way that you guys can understand because I'm receiving a lot of messages. So I just say instead of replying each person one by one, it's better I do a video right covering it. So now um this is the pair actually. So this is what I'll do. Let me go to the monthly time frame. If you see, this is the monthly time frame of JPE 225. Right? You can see it's bullish, right? So price is creating higher highs, and it's also creating all-time highs as well. Right? So you can see we're in a bullish market, right? So this is on the monthly time frame. Now let's go down to the weekly time frame. So the weekly time frame, you can see the weekly time frame and the monthly time frame aligns together, right? Now, so I've seen our monthly time frame is bullish, our weekly time frame is bullish. So now we move on to the daily time frame, right? So now the daily time frame, you can see the same thing, but then you start seeing the structure forming well, right? So now this is what I did. Now I noticed that since we're creating all-time highs, right? Now there's something I said about exhaustion candle. Now exhaustion candle is um so let's say we're in an uptrend, right? So let me just explain what an exhaustion candle is. Like we're in an all-time high, that's what I mean. So price will do something like this, right? It will create an exhaustion candle here, and then okay, let me use this thing to explain it. So for instance, this is our candlestick, right? So make this thing going, right? And then this is the wick. This is our wick. Now you can see something like this. It can also have wick at the at this point. It can also have wick. It doesn't matter. I just want to explain what this exhaustion candle looks like or how it's usually formed. So this only when you're in um, all-time highs, right? When you're creating all-time highs. So when you see something like this, right? The market will so let me do this. So market will create that high, and then it will reject it massively. Like there will be that rejection. So when this rejection happens, right? We don't know if it's an exhaustion candle yet. We are just only seeing it. So now the confirmation is the next high that is going to create now, right? It's not going to take out this exhaustion candle high, right? So what it can do is you can see something like this. Price will pull up to something like this, pull down. Sometimes it can take out this high, while sometimes it might not take it out, right? But sometimes depending on structures, and then you can see you start seeing it retracing or pulling back. It's not like it's changing trend, but it's just that it's giving you confirmation this kind of idea that it's going to sell at some point, right? It's going to sell some. I will show you another example so on I think on BTC because that was what gave me the confidence about the idea of this trade, right? So you can see something, you might see something like after the exhaustion happen, price will pull back down, right? Then pull up, create a high, a low. Sometimes price might come and take out this high here, but it will not come here, right? Both this one high and this high, they are not going to take out this exhaustion candle high, right? They might come close, but they will not take it out. Then you start seeing pullback like this. Like this, it will show you that a sign of sales about to happen. So I will going to show you in the chart now. Right, I'm going to show you in the chat. So let me just delete this. I hope you guys are hearing me clearly. So you can see this exhaustion candle as I stated. Right, so this exhaustion candle you can see something like that here. Right, but you might not really see how clear it is here. Let me until I go down to another lower time frame, you see it clearer. So I'm just going to take this, right? I'm going to do another one later on. So you can see this on the daily time frame. Now let's go down to the 4 hours. I know you'll be wondering why I'm switching time frame. This is actually what I do. So now you can see this exhaustion candle I'm talking about, right? You can see, you see an example here exactly. Like you can see how it inform. This you can see. So this is on the 4 hour time frame. Let me go back to the daily time frame. So you can see this exhaustion candle, right? So let's go down to the 4 hour. Right, so this is the 4 hour. And now I want you guys to know that when we're in an bullish market, when price is creating all-time highs, this when you I've never seen it for a bearish market. I've not seen it yet. I've not really that deep, but for bullish um markets whereby market is creating all-time highs, right? So you can see this is an exhaustion candle. Let me write that. So, exhaustion. So this is an exhaustion candle. So you can see the way it is. You can see this massive. This is showing you this, or this is proof that for this to happen, right, there is a massive rejection, right, from sellers all the way from here to this point. Right, there's massive rejection. This is showing that even if price is going to come up, it may likely not break here, right? But if price breaks above here, it might not sell. I don't know. I've not checked. I've not seen this yet, right? Not seen, but I believe that if price take out this high, it might continue going up. But as long as price doesn't take out this high, you should start looking for a way to sell, right? You should start looking for a way to sell when price pull up there. So you can see what actually happened here was this pull, massive buy, and then you can see this massive sell. Like they rejected the price all the way down and closed here, right? And then you can see price pulled up but didn't take out the exhaustion candle high. Then there was a kind of consolidation here. Then this other high, I don't know if you take out that high, I'm going to check. Then you can see price has started selling. So you can see, so now it's going to pull back at least to a reference point, right? It's going to pull back to a reference point. Probably, I don't know, not checked about, so maybe where it might pull back to, but you can see something pull back like this. So let me check this high, right? Let's see. So you can see price actually took out this high, just like the way I was explaining. You can see price took out this high, right? Because um, we were, so at this high of this candle was 58443, right? 58443. Why this one is 844? You can see, so this one take out that high. So as I said, you might see something like this. Price will create an exhaustion candle and then sell, right? So the moment you sell it, you can start seeing a pullback. Now that pullback might come close to this, right? Close to the high of this, right? And then you can start see, sometimes it can take out this high. Why sometimes it might not take it out, it can come close like this, right? And then before you know it, to start giving signs of reversal, right? While others you can see that it will take out the high here, but it will not take out here, right? So now we're seeing something like this. So let's go down to 15 minutes. So I also going to show how I spot. Okay, let's go to our. I also show you how I spot my entry, how I took this entry, even though I didn't take the trade. So you can see this is our exhaustion candlestick, right? This is our exhaustion candlestick. Now let's go back to our 15 minutes time, right? So 15 minutes time frame. This is that exhaustion candlestick here. You can see price never came here, right? Price never price never took here out, right? So our high is protected, right? So the so after this, right? After this, based on how I trade, right? I my strategy is just for 14. So after I've gotten your directional bias, right? So you look for a liquidity sweep on the 15-minute time frame, right? So this is just my strategy actually, but I'm not trying to advertise anything here. I'm just explaining this state. So I look for liquidity sweep on 15 minutes time frame and look for market structure shifts, and then I look for entry. So my entry is either, let me just put it as PY, right? So either break so this is just what after getting my directional bias, right? I just look for liquidity sweep MSS and then my point of interest. So that's LMP, right? So this is just how my strategy is, right? So it's as simple as that. So now I think I analyze here, but I didn't see entry from here, right? I'm showing for this entry. I'm not going to do any other thing here. I think I analyzed it, but I didn't see entry here, right? Because but this was Wednesday, and when I had the play was here this week. That was this I think midnight. Yeah, midnight. That was like 3, 4. That's when I analyzed the trade, right? So you can start looking for your sell, your started or your model, right? What you trade, you can start looking for sell. So now what gave me the idea of selling from here was, as I said, I look for liquidity sweep of the 15 minutes time frame. This is how I trade. This is my strategy, right? Look for liquidity sweep of the 15 minute on the 15 minutes time frame, right? So you can see we're on the 15 minutes time frame here. So I look for, so if, since I know now my bias is that I'm going to be selling, so what I'm going to look for is a liquidity sweep of an old high or equal high, whatever you can call it. So this is a recent high that we have here on 15 minutes. So I was just waiting for price to take out this 15 minutes high, then I'll wait for a down close candle. So the moment that down close candle form, I'm just going to denote it on horizontal line, a vertical line, then go down to the lower time frame and look for my MSS, then look for my point of interest, to which I'm going to use as my entry. So you can see these are 15 minutes high that was taken out, right? So the moment price took it out and create a down close candle, so you can see it was a bearish candle, which is a down close candle that took the high and it dropped down. So I marked it, right? And then what I did was I went down to, I think this entry was 1 minute, right? Well, even if you had used 3 minutes, you would have still gotten your trade, right? So because if you're using if you are marking as your market structure shift, right? So your entry would have been something like this, right? From here to here. So even if you had used here as your entry, right? You would still be inside the trade, right? You would still be inside the trade using here as your entry, right? It's just that it's going to give you a much higher risk, right? In fact, you would have been inside the trade from here, right? Inside the trade from here, and those that don't move their stop loss to break even will still be inside the trade, right? But that's not actually what I did. So my entry was on the 1 minute time frame, right? My entry was on the 1 minute time frame. So this was my market structure shift, right? Then now my entry, I'll use this other block here, not this, right? I'll use this, but because they are close to each other, I will have to put my stop loss here, right? So let me explain what I mean. So my entry model is like when not enter, right? When we have something like this, and then price create an MSS, but before creating an MSS, it creates another block again here, then before that MSS, right? So when I'm going to take this entry now, I'll take my entry from this other block here, and depends on how it forms to know whether um my stop is going to be above this other block or it's going to be here. It depends on how it forms, right? Then I'll pick my entry from here and sell, right? So this is how I take my entries, right? This is how I take my entries. While if we have something like this, right, an MSS, right, and then price just all of a sudden just massive sell or massive MSS, right, on the lower time frame, like 1 minute, 3 minutes, the one that is clear for me, right, and I'm marking as my MSS. So what I will just do is, so if I mark it as my MSS, what I will then do is my entry will now be from the breaker here, and I'm going to be selling down. So when there's this massive move whereby price did not create any other block, something like this before, so I'll look for my entry for my breaker. But when price just massively sell like that without, so I'll look for my entry on the breaker blockage. So this is just how I did it. If I take profit on sometimes on the 15 minutes low, right? So that's how I spotted my entry there. So you can see I picked it from here to here. Then price came after all this consolidation on 1 minute, and then came, tapped it, then went back up again, tapped it, and then you can see. So I think this should be, man, this is 1:40. So it's actually this kind of entries give me a very good risk to reward, and the stop loss is very little, and the risk to reward is crazy, right? So if I had taken this, they probably I would have closed the trade, or I would have taken partials and then break even over the rest to run in case the reversal happen, right? In case the reversal happen. So you might take profit maybe at this point here, at here, or just take 50 if price is going to sell down, right? So that's just, so at different point you take profit. You can see here we have equal lows here, a very clean relative equal low. Of course, price is going to come and take it out. Expecting a massive sell, like a break from this, for this liquidity is a draw on liquidity, so price will want to take it. So I hope it's clear. This is just how I was able to analyze this jump. Sorry, JP225. So that's all. Okay, I forgot. Let me show you this exhaustion candle also. I think it happened on BTC. Let me show you this exhaustion candle on BTC. I can't remember the exact time frame that it formed, but it was from BTC. Let me use my main BTC broker. It was on 15 minutes. So I can't remember. So let me just see if I can spot that particular, or was it on gold? Sorry guys, I don't want the video too quickly on gold. Exhaustion candle. Okay, I think it's good because it was good that has been creating all time high. It's on good. Just remember now. Yes, it was actually on good. Okay, yes, I've seen it. So yeah, this is it. This was it. This is it. Right. This is the exhaustion candle. This is, I don't know how it's formed on. Let me check how it's formed on um the higher time frame. Let me see. Can't remember. Let's check 4 hours. It didn't form like that on 4 hours, right? It didn't form like that on 4 hours. Well, it did on 1 minute, 1 hour, and also 15 minutes. So as I said, this is only when we're in all time high, not on normal, just normal uptrend. When we're in all time high, you see something like this. So this was an example. So gold came up all the way up here. So if I zoom this very close, you see that price didn't take out this. It came very close, right? It came very close, but price didn't take out the high, right? So you can see there was this massive buy, exhaustion candle, sell, all time high, and then price started tracing, and then had this consolidation here, came very close, sold, took out this low here or this quit here, and then you can see price was now having problem to continue going high. right? So you can see the high exactly just like that jump. And then, so actually this particular trade, I was so angry. I, I had hit SL, I had to like backtest it. If not, I would have made with a little, I think with like with 0.01 you would have made about this 0.01. I had forgotten. I think I would have made okay, I was risking about $20. Yeah, I would have made about 400 plus $420 of this trade. I hit SL. I think I saw something that made me wanted to buy. Like I can't explain anyway. So this was an example of my exhaustion. You can see when it happened, it was all time high here around 5597, right? And then what we expected came very close but did not take out this high. So you can see how it sold. It first consolidated the high there. So so you can see how it sold. This is good, guys. This is good. So you can see and then instead pulling back, right? So you can see how we sold here. Price came pull up back and then sell, taking out all this liquidity here. So if I was expecting something like that, I'm not saying it's going to happen exactly, but we should be expecting that sell also here, right? Should be expecting that sell. Expecting at least to take out here, but even if you don't take out, say that you not take this trade, I think it should be around one ratio 20, 23, 23 now. The total take profit is one ratio 40. So this is just how it is. So this is 39 pips. Sorry, 3.9 pips. You can see how very small the stop loss are. Like my the way I based on the way I trade, very small stop loss. This is 3.9 pips. Right? So you can see it will give you more risk one like that to introduce a better loss. Because 0.01 here, it's like you're risking 0.03 or 0.3 cents, right, on this trade. So you have to increase your losses to match how much you're willing to risk. So that's just it. Thank you guys for watching. Um, I'm glad anyone is going to learn anything from the trade, right, or from the analysis. So I hope I've answered you guys' question. Thank you. Peace out.